Assalamualaikum and hi to all of you. In today's video, we are going to be exploring the history of tax, overview of Malaysia's tax, tax in the United Arab Emirates, and country with free tax. What is tax? Tax refers to the act of imposing a tax by a taxing authority. Why do we have tax? Tax aim to stimulate economic growth by becoming government revenue that will contribute to public expenditure. To make this topic more interesting, let me brief you with the origin of taxation. The first record of organized taxation comes from Egypt around 3000 before Christ. In the Egyptian kingdom, commissioners would be sent by the pharaoh to collect 1/5 of all grains harvested as a tax. Tax practice continued to evolve when it leads to the Common Era, as Greek civilization overtook much of Europe, North Africa, and Middle East. New taxes on inheritance, property, and consumer goods were imposed since the Roman age. It played a role in the war either by funding them or promoting them. When the Mongol Empire took control much of Asia, the instituted tax policy designed to influence large-scale production of certain goods like cotton.
Next, let's get a brief overview of the Malaysian taxation system. Malaysia uses a territorial-based taxation system, and the system follows the calendar year, where the tax year starts from the 1st of January until the 31st of December. Some examples of taxes include: first, corporate taxes for businesses; second, income tax for individuals; third, property tax for properties; fourth, road tax for vehicles; and fifth, consumption taxes like GST and SST. In hopes to lessen the burden of the nation, Malaysia also offers tax exemptions, reductions, and also benefits. The collection of taxes in Malaysia is done by LHDN, Inland Revenue Board of Malaysia, and also Royal Customs and Excise Department, RCED. RCED is responsible for the administration of indirect taxes, while LHDN is responsible for the admin and also collection of direct taxes.
Now, we will look at system taxation for global. The first country is United Arab Emirates, UAE. This country is located at the eastern end of the Arabian Peninsula with a 9.99 million population. Let's take a look at how the taxation works. Employees who are UAE nationals will be automatically deducted 5% from their paycheck for the social security regime, while for the employers will be deducted about 12.5%. For corporate taxes, they only levy on oil companies and foreign banks in the UAE. There are 55 free zones in the country that are exempt from paying tax for a period that can be extended. There are no capital gains tax unless the company is taxable under another income tax. There are few services in UAE that are taxable, for example, tourist facility tax like restaurants that will charge 10% of the service charge. In Dubai, they collect about 4% of the charges for the transfer of property.
Let's talk about tax-free. When we hear the word tax-free, the first thing that comes to your mind must be, is it possible for a person to not be taxed? The answer is yes. For those who have become used to paying high taxes, imagining countries where one can live completely tax-free might sound like a distant possibility. You may be wondering how these countries generate enough revenue to survive without taxing their citizens. Many low or no tax countries generate their revenue by other resources. These, of course, may vary according to the country. For instance, many of the Gulf countries do not charge their income tax. It is because their public oil industry generates enormous amount of revenue. Then, there are beautiful island nations like Bahamas and Cayman Islands where they receive most of their revenues from offshore financial services and tourism. These countries are able to draw a massive volume of foreign investment because they have tax-friendly regulation that does not require the imposition of direct income taxes. So, it is clear that there are countries with no taxes.